Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and momentarily we are expecting to have Michael Maloney with me. He is not yet available, but expects to be available shortly. So I will keep my contact alive here with my engineer, and as soon as Michael appears, we will be talking to him. Meantime, I would like to just talk to you a little bit about some of my thoughts and some of what I'm going to be talking about when I speak at the Cambridge House Show this coming Sunday in Vancouver. One of the things I'm going to talk about, well, the title of my talk is 4 Top Gold Picks for This Wretched Market. And so the criteria, the companies that I'm looking at, and I'll be writing about this weekend in my newsletter as well. The question that I have and the criteria is the companies need to be able to survive the current environment without massive shareholder dilution. Let me just make sure I'm in touch here with my engineer. So that's the first thing. Can the companies survive the current environment, this bear market? Perhaps we're ready for a turn in the market to a bull market in gold. I suspect we are, but I thought that for some time. So the question is, what companies can we hold that can survive this without massive shareholder dilution? Because many of these companies have to go out and issue shares simply to stay alive. I believe we might have Michael Maloney with us now. So I will talk to you a little later about the 4 top. Let me just mention, finish my thought here. The 4 top picks for this wretched gold market. One is, can the company survive the current environment without massive shareholder dilution? Secondly, can they grow organically from internally generated funds in this bear market? And thirdly, do they have large, massive upside potential relative to the current market cap? And I've identified 4 companies. I'll just name them quickly. I will be talking about them in Vancouver this coming Sunday. Osisko Gold Royalties, Dynacor Gold Mines, which has been a sponsor of the show, Gold Source Mines, and Novo Resources also has been a sponsor to the show. There's some very exciting opportunities for this gold share market when it finally turns around. And with regard to that, I hope that Michael Maloney can help me and help us understand when and if this gold market is ever going to turn around. Michael, are you there?
I'm here, Jay. How are you doing?
Oh, I'm doing very well. Thanks. I'm glad you could join me. I should mention, I guess, to our listeners that goldsilver.com is really where they should go to follow all the things you do and to purchase the products that you have. You do sell gold and silver products, I believe, and so goldsilver.com, that's where they should go, right?
Yes, we are a precious metals dealer, goldsilver.com, but we also have Hidden Secrets of Money, which is the most watched economics, monetary history videos on YouTube, and that's available at hiddensecretsofmoney.com. And then there's my book, Guide to Investing in Gold and Silver, which is the best-selling book on investing in precious metals.
Yeah, the Hidden Secrets of Money, which I've watched, is very well worth people taking their time to watch it. It is a very good educational piece, and I think, I just wish more people would watch it, because if people understood what was really going on as it's laid out there in the monetary system, I think people would react differently and probably vote a little differently too, Michael.
Yes, if your viewers get a chance, please watch episode 4 about the monetary system. It's called The Greatest Scam in the History of Mankind. And it shows very clearly how our monetary system is basically just a Ponzi scheme. It's a pyramid scheme. It always requires us to go deeper into debt every year, the entire world, to maintain this monetary system.
Yeah, and then the question is, how much further will the physics of nature allow us to go? How much further in debt can we go, Michael, before something has to give, right?
Right. We're getting very close to that breaking point right now. And, when I was doing the research for my book, I had discovered that every 30 to 40 years the world had a new monetary system. The average person did not feel the change. This was something that only the countries and the international banks and international businesses felt when we went from the classical gold standard before World War I to the gold exchange standard between the wars to the Bretton Woods system from 1944 to 71, and then the global dollar standard from 71 until today, which is now 44 years old. It is the worst designed system of all, and it's due for its own demise, and I believe we're going to have a currency crisis before the end of this decade, but everyone is going to feel it, and only precious metals investors are going to benefit from it.
Well, certainly there's going to be a lot of resistance to precious metals. There has been certainly just the indoctrination process, the fact that people aren't aware of this Ponzi scheme you're talking about.
Right.
The educational system, we're spending a huge amounts of money in the United States to build schools, and yet people haven't a clue, haven't the most basic understanding of what money is about. And I have to think that's at least partly by design, Michael, because if people really understood what was going on, they would sure as heck want some changes, and the establishment wouldn't be very pleased with the changes they desire.
Right. Well, one of the biggest things that we have to accomplish, I mean, you and myself and all the other people in the precious metals / Austrian economics / hard money community, is starting to define the difference between money and currency. There is no nation on the planet that uses money. You do not have money in your pocket. That is a national currency. It's a fiat currency. By its very design, it has to continue losing value throughout its lifetime, or the whole system implodes. Money has to be a store of value. That's one of the key attributes. Mm-hmm. Currency has to be a medium of exchange, a unit of account, portable, durable, divisible, fungible, which means the units are interchangeable. If I loan you a $20 bill, you don't have to pay me back that exact $20 bill. You can pay me back 5 ones, a 5, and a 10, and I don't care. So that's fungibility. Right. And then money has to be all of those things plus a store of value. And an ounce of gold still buys about the same amount of stuff as it did 2,000 years ago. So it is a store of value. The dollar's lost 96% of its value since the inception of the Federal Reserve. It's not money, it's a currency. And we have to start telling that to our audiences so that our audiences start understanding the difference between, when you hear people talk about gold as honest money, It doesn't steal from you. Our currency system is designed to tax you and rob from you continuously through either direct taxation to pay off the bonds that the Federal Reserve purchases with a check from nothing, it's counterfeit basically, or through the inflation tax. There was no inflation before the Federal Reserve. So there were short-term inflations and deflations that were caused by the velocity of money, but when you don't have this continually expanding currency supply, you don't have positive inflation all the time robbing you of your wealth. So, yeah.
Well, you mentioned money needs to be a store of value. I recall a discussion you and I and my friend Ian Gordon had up there in Vancouver 2 or 3 years ago, in which you were almost in complete agreement with Ian's views that we were heading into a deflationary implosion, the likes of which probably would make the 1930s look like child's play. Are you still of that view? And if so, isn't the dollar then a store of value if we're in a deflationary environment?
Yes, it will be temporarily. It's going to be the beneficiary of this will probably start out of China or Europe, and there will be this temporary flight to what people have been taught is the safe haven, which is U.S. Treasury bonds. And that will make the dollar the beneficiary of this temporary event. But we are in for a global deflationary episode, and so the dollar will rise temporarily. But the one safe haven that you can always count on, I mean, if you go back 2,000 years, there isn't any any IOU written by any government that is worth anything. And that is exactly what a bond is an IOU. So people are trained to run toward IOUs for safety. Well, the counterparty has to have the ability to pay. With gold, there is no counterparty. And so it is the ultimate safe haven. And so you're going to see one last pop in the dollar probably, but then you're going to see gold take off like a rocket. And in the last great deflation, the only big deflation that we can point to, where our currency was semi-disconnected from gold, gold rose from $20.67 an ounce to $35 an ounce, while the dollar gained in purchasing power. And so your total purchasing power, if you were invested in gold during the Great Depression, went up about 2.5 times. Mm-hmm. Now, Roosevelt committed treason and made gold illegal for Americans to own, our constitutional money. He made it illegal for Americans to own, punishable by jail time and a $10,000 fine. And they stuck us with Federal Reserve notes, and so you couldn't really be invested in gold, but if you were invested in gold mining stocks, homestake mining was the number one investment during the Great Depression. You could not have done better than to be invested in gold mining stocks during the Great Depression. So that's the only big deflation we can look back to and compare to what is coming, and the best investment was related to gold.
All right, Michael. Well, Roosevelt confiscated gold, as you pointed out.
Well, he actually nationalized. The people that use the word confiscation, it's usually a coin dealer that wants to sell you an overpriced numismatic. Confiscation
okay.
Conjures up visions of somebody busting down your door and hitting you over the head and taking your stuff. They requested that you go into any member branch of the Federal Reserve, and they bought it from you for $20.67 an ounce.
And if you didn't do that, though, there could be a jail sentence awaiting you.
Exactly, yeah.
Over time. If they found out that you hadn't, by such and such a time, turned in your gold, they could put you away.
Correct, yeah.
Now, okay, so if we're heading into another deflationary period, do we need to be worried that the same thing could happen again? I mean, I can remember the time when Henry Royce and his banking committee went forward, and under President Ford's signature, we made owning gold no longer a crime in this country.
Right.
Might they reverse that again, Michael? And if so, should we be looking at gold mining stocks as a possible alternative, or if not an alternative, at least diversification?
Absolutely. I have changed my stance on this since I wrote my book. It's one of the few things where I have modified my thoughts. I used to argue that the U.S. would only nationalize gold in the midst of a hyperinflation because if they once again outlawed private ownership of gold, when they did that in the 30s, the world was on a gold standard, and the number of dollars outside U.S. borders was very, very small. Today, the number of dollars outside the United States is about equivalent to the number of dollars inside the United States or greater. The world uses dollars. If you look inside all of the big international banks in Singapore and in Hong Kong and Moscow and Shanghai and around the world, what you will see is that they're all using dollars to send currency back and forth, and then using the Forex to change those dollars into their local currency when they receive those dollars. So these banks are just full of dollars internationally. If Obama today signed an executive order nationalizing gold once again, wouldn't you think that the rest of the world would go, oh my God, there's something wrong with the dollar, and start dumping dollars and buying gold? That would give them the exact opposite outcome of what they would want, which means the dollar would crash and gold would go to the moon. However, since I wrote my book, I just watch government do one stupid thing after another, and I'm pretty well convinced that there are no decisions that the government makes that are good ones.
Yeah.
And so I started thinking that perhaps they would be stupid enough to do that. Before I was thinking the only way they would do that is if we were in a runaway hyperinflation and they had nothing to lose by doing it. Right. Because it has been done in the past, not just in the United States, but you look throughout history, when you're in the midst of a hyperinflation, it's about a 50-50 chance that they will ban the use of gold and silver in transactions somehow. But I came out with a line of bullion jewelry. I call it bullion jewelry, because it's called Gold Without Borders, simply because, and what I did was I went to a chain manufacturer that manufactures 22 karat gold chain that's the same purity as a gold eagle coin, and had them make up necklaces and bracelets in bulk so that I can sell them very close to the spot price instead of 3, 4, 5 times the spot price like jewelry stores do. And then we make a two-way market in it. We buy it back from you. It's something like Elizabeth Taylor used to be able to fly around the world with $100,000 worth of precious metals around her neck and had no problem. So you can put on a whole bunch of wealth, and when you land in another country, you don't have to fill out a card. When you're filling out the landing card, it asks if you're bringing cash or cash equivalents such as stocks and bonds into their country exceeding $10,000. You don't have to fill that out. And there is no time in history that I can identify where a nation has confiscated jewelry from its citizens. They always come after coins and bars. And so, with the exception of, like, when they're persecuting one set of people, like in Weimar, in Germany, when they were during Hitler, when they were not Weimar Germany, but Hitler's regime.
Hitler's Germany,
yeah. And so, and the only other thing that you can own is gold stocks, just like in the 30s. That's what gold stocks usually give you big leverage to the underlying asset, gold, but it gives you just as much leverage to the downside as it does to the upside. So when this bottom is in, then it's time to move some of your assets into precious metals stocks for leverage. But I do believe every precious metals investor should have a core position of gold and silver, physical, because at first, when the market crashes, the stocks go along for the ride big time. When the general stock market crashes, if you look back at 2008, however, gold went along for the ride, but then stopped in October. The general markets kept on crashing until March of the following year. So.
And I might add that gold stocks did exceedingly well for a couple of years there as the real price of gold rose. That is, gold rose relative to some of the costs of getting it out, oil and other materials costs and so forth. Well, Michael, I want to ask you, we titled today's show, Are We Facing the Greatest Crisis in Human History? And I picked that title up from a little discussion that you and Harry Dent had. It was on your, I guess it was, I saw it at the on YouTube. And so I want to ask you if we're first of all, I want to ask you about that. It sounds a little bit dramatic, but and I know you're talking about the redistribution of wealth that's going to happen. I want to get to that, but before we did, something else just cropped up in my mind concerning Mr. Dent. He is widely known for suggesting we're headed to $600 gold. Now, with that, I don't know if you're in agreement with that, but if that, I could understand how that could happen if we go into a real deep deflation. So the dollar could continue to gain versus gold for a while, but at some point when the system, when confidence is lost in the dollar system, that could turn around real quickly. Do you see that kind of downside potential? Are you in agreement with Mr. Dent on that issue?
I think we could see a potential spot price dropping below 1,000, but I think if you have 3-digit gold once again, the number of people rushing into that sector trying to buy physical will cause a huge divergence between the spot price and the price you can actually obtain physical for. And then the other thing is, Harry doesn't account for certain factors. He's just basing things off of demographics and history only, but there are twists. He's viewing gold as a commodity. Now, I believe that he has been saving people from investing in gold since it was about $400 an ounce. He's been telling people not to invest in gold since it was. So he kept them from that ride all the way up to 1900. And maybe I'm wrong. Maybe this was who's the Elliott Wave guy? Bill
Prechter? Robert Prechter?
Robert Prechter. I'm sorry. Yeah, Robert Prechter. He's been saying that gold is going back to $250, and I thought Harry had also said $250. But if you look at what's happening right now, see, in the 70s bull market and during the Great Depression, the last great deflation that we had, when gold performed during the Great Depression and it performed during the 70s bull market, China and Russia were not a factor. Half the world was basically living under communist regimes where the government ran everything, the government owned everything, and there were no markets. So more than half the world's population, they could not buy gold. This was an illegal thing. Those markets did not exist in those countries. Right now, China and India combined consume more than all global gold production. And so we've got these huge buyers that buy every time it goes down. And this is a train wreck waiting to happen. Yes, you could see the spot price dip below 1,000, but it's not going to stay there. Like Harry thinks it's going down to 600 and it's going to stay there. You're going to see the world rush towards safe haven investments, which is considered U.S. treasuries and gold and silver. And when they rush toward these, it doesn't take, I mean, if 99% rushes toward bonds and only 1% rushes toward gold, you're still going to have an explosion in the gold price.
Yeah.
And then as bonds top and start heading south, some of those bond investors are then going to rush toward gold. Because bonds are in the end stages of a 30-year bull market. Bull markets do not last forever. I think we're going to get this one last pop, and then it's time for the bond bubble to pop. The bubbles don't persist forever. It's impossible, and bonds are in a bubble.
Well, there's no question about that in my mind, that's for sure, but yet we see this, you mentioned velocity, and people are hanging on to their money. I believe people are hanging on to their money because they don't, the common folks, the average, the middle class, doesn't have the money. They have to hang on to it to pay their rent. They don't have any extras in their credit. They're tapped out on their credit cards. Maybe they have a little space yet, but they're worried about the future. Their jobs are in decrease or in decline. How do we get from there? As I understand, Michael, you're really looking at ultimately this deflationary event turning around into a hyperinflationary event. How do we get to that point where velocity changes? Because I think that's what you'd have to have, right?
Well, you're going to see that in my next episode of Hidden Secrets of Money.
Okay.
It's the Day of Reckoning. And basically, if you look at Weimar Germany, during World War I, Germany, all nations in Europe stopped redemption rights. You could no longer turn in your currency and get money for it. You couldn't go into a bank, give them your national currency, and ask for a gold coin in exchange. So you couldn't trade currency for money. Once they stopped redemption rights for real money, they lit up the printing presses, and every country, every combatant printed to do deficit spending, because in war, you have to outspend your opponent to be able to win the war. And Germany expanded their currency supply. They added 400%, so it was 5 times larger at the end of the war than it was at the beginning of the war. Inflation picked up a little bit during the middle of the war, but then dropped back down as they started to lose the war, and their borders were collapsing in on them, and their sons were being killed, and anxiety levels rose. They saved every extra mark that was printed. And then after the war, the anxiety was lifted once the war ended, and those marks they had been saving came out into circulation, and the purchases that they had put off, the things that they didn't buy for 4 years, they started making purchases. Velocity picked up, and there was a hyperinflation, which I've never heard or read anybody, nobody's ever talked about this, but in 1919 to 1921, prices rose 9 times. So there was a 900% inflation in those short years. That's a hyperinflation. Then it leveled off in late 21 through mid 22. And then prices rose another 700% before the end of 22, and that's when something broke. There's a Pavlovian response. People that had already been punished by losing 90% of their purchasing power back in 1919 through 1920 They knew better this time around, and they started spending every piece of currency they could get their hands on, or borrow it and spend, so they'd spend it before they got paid. And that's when you reach a positive feedback loop where hyperinflation can't be stopped unless the government lets all government employees go, shuts down the government, and waits for the free market to account for all of the currency. The price levels have to rise until it accounts for all the currency that's in circulation and the velocity that's going on. And no government has ever made that choice. They always print their currency into oblivion. I'm expecting that as the baby boomers get scared, and with this next crash, they are now of an age where they want to retire in 5 years. And they're going to try and hang on to every unit of currency, whether it's dollars or euros or yen. They're all going to be hanging on to their currency and not spending it. And that causes velocity to slow down. And no matter how much Janet Yellen prints or whatever, the deflation will continue until they get enough saved up to where they figure, I think I could retire now, but I really deserve that new car or that new big screen TV or the latest computer. Once their anxiety is lifted by having enough saved for retirement, that's when currency starts coming out into circulation, and we could actually have a hyperinflation without the Fed printing anything.
Well, there's certainly enough money in the system right now. It's just sitting there to a great extent. I think we're seeing velocity levels akin to what was in the 1930s, perhaps, Michael. And
yeah, they're dropping off a cliff, right?
Yeah, it's really amazing to watch that. Now, we only have about 3 or 4 minutes left, so I need to ask you quickly let's get to this title. We are facing the greatest crisis in human history. Now, this crisis going to happen before or after the hyperinflation? Or is it all part of the same thing?
I think this is the crisis. I think the markets have topped right now, and we are in this space where over the next few years we're going to see a really big crash, and it's probably, the market's levitated to where they are. This is all engineered. In fact, lately I've been showing charts of how the Wilshire 5000 total market cap index, so this is a measurement of the value of the stock market, how it exactly tracked the creation of base currency, the excess reserves that are on banks' balance sheets. And it is so, the correlation is so close that it's a virtual impossibility that that the markets going up to where they are, that the creation of currency by Ben Bernanke was not directly responsible for it. So it's an engineered manipulation, and manipulations always end badly. And you are about to see that this is going to be the big disclosure where people will be able to see finally that Keynesian economics has failed. It does not work, and Austrian economics is correct.
So we're going to see a loss of confidence. The con game will be up.
Yes.
Who will be the winners? Who will be the losers? With 1 minute left, Michael.
Well, what you're going to probably see is a short-term dip in precious metals, and you have to use, to me, I'm using this to buy. I think gold under $2,000 is just a bargain and a half. So if you can buy down near 1,000, or even if it does dip under 1,000, I don't think you're going to be able to get a whole lot of physical for under 1,000, but the stocks will be a bargain. But this is the time right now over this before gold starts to spike is when you want to buy, not after. And
sure.
Then it's going to take off like a rocket one of these days and never look back. I don't know if if it's a permanent deflation, you will see the dollar survive. But I doubt that that's what's going to happen because the central banks have the hubris to print until deflation gives way because they think they can control things and they cannot. They've already lowered interest rates to zero, so they're out of those bullets. The only bullet that they've got is currency creation. And they will create and create and create until the dollar and all the other currencies start to fade into oblivion.
All right. Well, it would really be good if they could set their hubris aside and recognize what money is, that it's not currency, it's gold, it's silver, as defined in our Constitution. But I mean, I guess to hope for that is probably a bit unrealistic given the history of central bankers, and so we want to prepare ourselves as best we can. And you're doing a really great job. I want to thank you, Michael, for that, for being with us, and also for the wonderful material that you provide at goldsilver.com and on your Hidden Secrets of Money websites. Those are excellent. I want to thank you very much. Anything else you'd like to add before we say goodbye for today?
Just please take a look at Hidden Secrets of Money. It's free. It's educational. It's not trying to sell you anything. We think it's very well produced. It's shot in 18 countries around the world, and I think your viewers will really enjoy it. Well produced and entertaining and educational and free. It's hard to beat all of that. So thank you very much, Michael, for being with us today, and look forward to doing it again sometime in the not-too-distant future. Thank you, Jay.